All right, so in today's discussion here, I want to talk about how to analyze a gap, what I do anyway to analyze a gap and determine, what kind of my expectations are. And I'm doing this all pre-market. So the first thing I do is identify the gap. So if I look at the AMGN this morning, this black line is where the pre-market shows it's potentially going to open up. So this is what I would see pre-market. And basically you've got a bullish candle gapping down, so it's a bear gap and go. Now, I was concerned because it was sitting around the 20 and I was hoping there wasn't going to be support there. So I did watch this a little bit on the 5 minute, but the point that I'm trying to make is that it's a bull gap and go. So a bear gap and go. I'm already bearish on this because there's going to be buyers that bought in here that are trapped. So I'm bearish on it, but I'm looking at this 20 EMA as a potential support level. So there could be buyers there. If it breaks that support level, then I was looking at a target of this lower wick right here. And I actually picked it off of the hourly chart, because the hourly chart, this is the next pivot right here. That's the next pivot based on the pre-market. So, that's the next pivot if it breaks down from where it's opened. So it's opening here. This is the next pivot. That was my target. Now, if you take a bigger look, you then have a potential target here as well. So this is how I pick my targets. I just look at these levels. This is a pivot, this is a pivot, and I usually pick my targets off the hourly chart. And I can get all of these targets pre-market. So I'm not looking to set my trade up and say, okay, well, if it breaks 249.76, then I want to take it to 243.95. What I do is I set this 249.76 level as a level that I like it lower. So if it breaks below this level, then I'm looking to take it to the 243.95 area. So what happens is when it opens up, let's go to the 5-minute chart. And when it opens up, I've got a nice little candle, bearish candle right here. And I played it actually off the 2-minute chart. So let's just zip over to the 2-minute chart. You end up with a bearish candle, then a bullish candle, and then another. So you're getting a little bit of consolidation in this area. There's some good support sitting right here. So if that area breaks, then I have a good case for this to go lower. So I'm still looking for a setup in this area because I want it below this line here. As long as it's below this line and holding below this line, then I'm looking for a short on this. If it starts to hold above this line, then I'm thinking, okay, well, maybe this isn't as strong as, it's not as weak as I think it is. It's got more strength, and it was probably getting support off that daily 20. So I still need to find a setup. And once I get the setup, which I took this setup, so a break of this support, I took this and I just exited when it hit this trade. So I got triggered in right there, and I'm watching this. I was getting a little bit nervous, but it still consolidated. You kind of get a little double top right here, and then it starts to break down. Now, I took it at the first target. I didn't want to baby it. I just set the target, left it, and forget it. That's what I did. And let's just move this further because it triggered me out right there. I got triggered out, and that was the end of the trade. I was done for the day on that one. But as you can see, it continued lower. And if you were to sit and manage this trade, you could have easily just kept lowering your stop to do that. But as far as picking the targets, setting and forgetting, and it just about made it to that second target. I guess the point that I'm trying to make is that you were wondering if I set my entry and my exit pre-market. I set my target levels pre-market, and I set the levels of support resistance pre-market and where I like it, either above or below. But I still wait for a setup once the market starts. And I use those lines that I've put on my chart as my setup afterwards. So let's take another look at another example. We'll do PM on this day. So this one here, if we go back one more day, when I was looking at this gap, it was gapping down again after 1, 2, 3, 4, 5, 6, 7 days. So I basically told myself, this is a lot of bearishness move. There's the 100 moving day average. This is a good support level. I put a line right here, and I basically said that I want this, I'm expecting this to bounce. I'm expecting this to fade higher. And this is where I'm expecting the buyers to come in. So this was my entry target somewhere in this particular area. I was going to wait to see what happened down here. As long as this area held, I wanted to take this higher. And then from there, I chose an hourly target, which was right here. And then if I went to the 2 minute, what I did was I played the 2 minute chart. Now remember, I'm looking for buyers to step in right here. And this comes in, it looks like it's not going to hold, but then this candle gets closed back up, and then we get this nice little candle right here, this hammer candle. So this is the second hammer, could be a double bottom. Now I entered the trade here. So I'm still waiting for a setup. And I got skipped on this, and you'll, sorry, it was this hammer here that I entered in. So then I entered in, or tried to get in there, but you see I got skipped. It jumped right over me. So I didn't actually get in at this level. I wish I did. I had to get in later. But my point is, I was waiting for this particular line. This was my entry line. I wanted it to hold above this level. We get a double bottom here. That's the signal to go long. And now I have my target set. So I can enter my trade. This is my target, and then I can set it and forget it. All right. So I hope that makes sense. If it doesn't, please let me know. I do this with every single trade. The idea is that you analyze every single gap pre-market and make those decisions about what you're expecting the trade to do. All right. Okay, so let's just